Welcome to another BAR walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over BAR Area 3. This is Section A1 still. This is an application topic. Prepare the government-wide statement of activities for a state or local government from trial balances and supporting documentation. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And after you watch that, you're going to want to learn more, so make sure you also check out becoming a SuperfastCPA Pro member. Pro members get access to a lot of great stuff, including the full versions of these 5-question YouTube videos. So in today's video, we're only going to be going over 5 questions, but again, SuperfastCPA Pro members will get access to the full 10-question version of the video when we post it in the member forum. So if you like this and you like our other videos or our other products, make sure you check out becoming a SuperfastCPA Pro member to get access to the full versions of these videos. Now with all that, let's dive straight into the questions for this video. All right, here we are at question 1, and as we're diving into this, I just want to remind you that the previous 2 videos, we talked about government-wide statements and about the statement of net position in more detail. Now we're talking about the statement of activities in more detail, which again is a government-wide statement. So let's dive into this. Which of the following would be reported as charges for services, meaning program revenue, on the government-wide statement of activities for a city government? Would it be sales taxes collected from local businesses? Would it be tuition paid by students to attend a city-run community college? Would it be unrestricted federal grant revenue? Or would it be property taxes levied on residents? Again, which one of these would be a charge for service on the government-wide statement of activities? Now, we've talked a little bit about this in the previous 2 videos, so if you've watched those, you might already have a little bit of an idea. But if you don't know, that's okay. We're going to use this question to learn a little bit more. So let's dive into the explanation. Okay, here we are. The answer is B, tuition paid by students to attend a city-run community college. That would be counted as a charge for service in this situation. Now let's remind ourselves what this is. We talked a little bit about it in the previous other 2 videos. Charges for services represent program revenues that come from exchange-like transactions, where citizens or businesses receive a direct benefit in exchange for payment. So in this case, tuition payments fit this definition because students pay in exchange for educational services. By contrast, sales and property taxes are general revenues as they are imposed without a direct exchange. Unrestricted federal grants are also general revenues since they are not tied to a specific program service. So when you see charges for services, remember that's basically an exchange-like or a business-type transaction because they're paying for something and they're getting something in return. They're getting a benefit in return. But if you see something like taxes, that is something that people are paying. And yes, we all technically benefit from taxes, but it's not a direct benefit. It's not pay money and get this direct piece of equipment or this direct benefit. It's, more general. So that's why it's not counted as a charge for a service. So we learned a little bit more about charges for services. And again, those are counted as program revenue in the statement of activities. Now let's go to the next question. All right, here we are at question 2. In the government-wide statement of activities, how are program revenues such as charges for services, operating grants and contributions, and capital grants and contributions reported? So we just talked a little bit about charges for services, so maybe you'll have a little bit of an idea for this. Let's go through the options. They are combined with general revenues and shown in a single total near the bottom of the statement. Or the next one, they are reported separately from general revenues, grouped together for the entire government as a single line. Or they are reported by function or program, reducing the net expense reported for each function. Or they are recorded directly in the fund financial statements rather than in the statement of activities. So where are these program revenues listed? Where are they reported? These charges for services, these operating grants, these capital grants, where are they reported and how? Now, if you don't know, again, that's okay. We talked a little bit about this in previous videos, but we're diving much more into it in this video. So if you need help, that's okay. We're going to look at the explanation together right now. All right, here we are at the answer C. They are reported by function or program, reducing the net expense reported for each function. So let's dive into this. On the government-wide statement of activities, program revenues are shown by function or program, such as public safety, education, or transportation. That would be their function or how they're split up. This allows users to see how much of each program's costs are covered by revenues generated specifically for that program, with the remainder shown as net expense. So the whole reason they do this is to show, this program is making this amount of money, but it's costing this amount of money so that people can see, the net afterwards. Program revenues include 3 types, as we were talking about. Charges for services, which is exchange-like transactions such as fees, utility charges, or tuition, like we were talking about in the previous question. Operating grants and contributions, and these are restricted for the operating needs of a specific program. And then capital grants and contributions are restricted for capital purchases or improvements of a specific program. So these are the 3 things that fall into program revenue. These are always reported by function to highlight how much direct support each program receives, while taxes and unrestricted grants are reported as general revenues at the bottom of the statement. So when you're looking at a statement of activities, you're going to see it broken up into program revenues. And again, that's charges for services, operating grants, and capital grants, so that you can see how they are doing, how much money they're making, how much money they're costing. And then anything that's not a part of that, like taxes or unrestricted grants, it'll still be on the statement of activities, but it's going to be counted as general revenue. So we learned a little bit more about how the statement of activities is set up in that question. Now let's go to the next question. All right, here we are at question 3. Which of the following is an example of a non-exchange revenue that would be reported as a general revenue rather than a program revenue on the government-wide statement of activities? So we just talked about some of this, so hopefully you can kind of figure this out. Let's go through the options. User fees collected for city water services, or tuition charged at a community college operated by the city, or fees collected for building permits or property taxes levied on residents. So which one of them would be a non-exchange revenue that is going to be counted as general revenue rather than program revenue on the government-wide statement of activities? Think about what we've learned so far, pause the video if you need to, and come back when you're ready. All right, here we are. The answer is D, property taxes levied on residents. This would be a non-exchange revenue. Let's go through this. And, this is kind of all in the same category as what we've been talking about before, just maybe the other side of things. Non-exchange revenues occur when a government receives value without directly giving equal value in return. Property taxes are a classic example. Citizens pay, but not in proportion to a specific service received. These revenues are generally reported as general revenues in the government-wide statement of activities, supporting overall government operations rather than reducing a specific function's expenses like we were talking about in the previous question. By contrast, user fees for utilities, tuition, and building permit charges are exchange-like transactions that qualify as charges for services, one of the 3 types of program revenues. So again, if you're paying money and you're getting something directly in return, exactly what you paid for, you pay tuition, you get to go to school. You pay for your utilities, you get to have power. You pay for a building permit, you can build that building or own that building or whatever the case is. Those are charges for services because you're getting something directly in return. Whereas what we were talking about before with property taxes, you technically get something in return because your city is using the taxes for something, but it's not in direct proportion to what you actually paid. So that's how you can kind of know the difference between non-exchange and charges for services or, exchange-like services. Now let's go to the next question. All right, here we are at question 4, and we haven't gotten to do this yet with the other questions, but this is something that I always like to point out when it's an option. You want to read the last sentence of the question first. This is a very good habit to be in, especially for test day, because you have no idea what you're going to be seeing on the questions. So read the last sentence first, because very frequently it will give you context for what the whole question is about. It's basically usually the real question of the whole thing. So we're going to do that here. Again, you might not always feel like it's necessary, but it's a really good habit to be in, so I recommend almost always doing it. On the government-wide statement of activities, how much property tax revenue should the county report for the year? Let's go up to the top. A county levies $10 million of property taxes for the current year. Based on past experience, officials estimate that 3% of the levy will be uncollectible. During the year, $9,500,000 is collected. So on the statement of activities, how much property tax revenue are they going to report for the year? So how do they report this? Are they going to report the full 10 million? Do they take into account the uncollectible amount, or do they only take into account the collected? How does it all work? Think about this if you want, and when you're ready, come back, we'll look at the answer together. All right, here we are at the answer A, $9,700,000. That's the amount of property tax revenue that they're going to report. So let's go through this. Property tax revenue is recognized on the government-wide statement of activities when levied, not when collected. That's a super important distinction that you need to remember. It's not super hard to remember, but you need to remember it. When levied, when they are basically charged, not when they're collected. The county begins with the $10 million levy and reduces it by the estimated uncollectible amount, which is 3% of the $10 million. So 3% multiplied by $10 million is $300,000. So that leaves $9,700,000 that they are going to report as revenue. So you count it as when it's levied, not when it's collected, but you do take into account the estimated uncollectible amount. The actual collections, $9,500,000, do not affect revenue recognition on the government-wide financial statements. The accrual basis focuses on the levy adjusted for estimated uncollectibles, not the timing of cash. So remember, because this is all under accrual accounting for the government-wide statements, we are recognizing the property tax when it's levied, but we do take into account the estimated uncollectible amount. So not too difficult to remember, but now you know that. Let's go to the next question. All right, here we are at question 5. Again, just to get in the good practice of it, we're going to read the last sentence first. In year 2, how should this be reported on the government-wide statement of activities? Let's go up to the top. A county constructs new roads at a total cost of $18,500,000 in year 1. The roads are expected to have a useful life of 25 years. So again, how is this going to be reported on the government-wide statement of activities? Is it A, no expense is reported until the roads require major repairs in the future? Is it B, the entire $18,500,000 is reported as an expense in year 2? Is it C, a $740,000 depreciation expense is reported for year 2? Or is it D, the roads are not depreciated because infrastructure is not reported in government-wide financial statements? So how are they going to treat the roads that they constructed? How are they going to treat these in the government-wide statement of activities? If you know, that's great, but if you don't, that's okay. We're using this question, just like all the other ones, to learn. So let's dive into the explanation right now. All right, here we are at the answer. C, $740,000 depreciation expense is reported in year 2. So it's way less complicated than you might have thought it is. You really just depreciate it kind of like you normally would, at least underneath accrual accounting. Under accrual accounting in the government-wide statements, infrastructure such as roads is capitalized and depreciated over its useful life. The county capitalizes the $18,500,000 in year 1 as an asset. In year 2, depreciation expense is recorded. $18,500,000 divided by 25 years is $740,000. This depreciation expense appears under the Public Works/Transportation function in the Statement of Activities. Governmental funds, in contrast, would have reported the full $18,500,000 as an expenditure when paid without recording depreciation. And again, that's getting into fund accounting, which we will talk about in a future video. So again, it's pretty simple. At least when you're doing the Statement of Activities under accrual, you just capitalize it over its useful life. Not too difficult. Now with that, we learned a lot in just 5 questions about the Statement of Activities. So before we do anything else, let's do one more part of the SuperFast CPA process called Pillar Topics. Now, the idea behind Pillar Topics is as you're going through the questions to learn the material, you will notice the things that keep popping up in the questions. You've seen 2 or maybe even 3 or 4 questions trying to teach you about program revenue or charges for services or even how capital assets are depreciated in the Statement of Activities. Whatever the case is, whatever you see in the questions, that is informing you what is most important to know. So you take a moment and you write them out in your own words, the Pillar Topics, so that you are ready for exam day when you get there. So let's go ahead and take a look at the Pillar Topics for this video. All right, here we are at the Pillar Topics. Let's just dive straight in. First off, program revenues, which remember are charges for services, operating grants and contributions, and capital grants and contributions, are reported by function on the government-wide statement of activities to show how much of a program's costs are covered by revenues tied directly to it. Next, let's talk about non-exchange revenues. Non-exchange revenues, which is kind of the flip side of this, like property taxes and unrestricted grants, are reported as general revenues because citizens don't get a direct service in return, and they support overall government operations instead of a specific program. So there's program revenues and there's general revenues. General revenues are things that are non-exchange revenues. Program revenues are stuff like charges for services or operating grants and capital grants. Now let's go on. On the government-wide statements, property tax revenue is recognized when it's levied, not when it's collected, and the amount is reduced by what officials expect to be uncollectible. And then finally, infrastructure such as roads is capitalized and depreciated in the government-wide statement unless the government elects the modified approach, which we will be talking about a little bit in the member version of this video. So if you're watching the YouTube version, we're not going to talk very much about the modified approach in this video, but SuperFast CPA Pro members, we're going to talk about that a little bit. With depreciation, the cost is spread over the asset's useful life. So the general idea here is when you're using the accrual approach, you just capitalize and depreciate those kinds of assets, that infrastructure, over its useful life. Now, again, we went over the pillar topics for this video and we went over the first 5 questions. Remember, as I said just a few seconds ago, we're only doing 5 questions for this YouTube version of the video. But if you want to get the full 10-question version of the video, you can become a SuperFast CPA Pro member. The easiest way to learn about and become a SuperFast CPA Pro member is actually by going to SuperfastCPA.com and signing up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam, and that will give you a better path to learning about and becoming a SuperFast CPA Pro member. So check out the webinar, check out becoming a pro member. If you found this video helpful, which I hope you did, make sure to like it and leave a comment. Thanks for watching, and I will see you in the next video.